So, we must be live, guys. I hope we are. Let me check real quick on my screen whether we are or not. Small cap stocks were struggling last day. They had a hard time. Yes, we're live. Nice. So let me adjust my screen and let's go ahead and jump in to see what's up today in the markets. Small cap stocks were down last day. They had a tough day. Like, let's see where most of them ended. Most of our favorite ones. We have Robinhood here at 1840. That's kind of puts down for Robinhood, considering that the rest of the market kept on going up. So it's interesting seeing that. But anyway, SoFi, on the other hand, had a nice move. Even though it struggled during the first half of the day, the second half of the day, it made a rise to 15.40, basically 15 and 40, $15, $15.40. I can't talk. Anyway, $15.40 per share. Honest at 8.10. And most of the small cap stocks had a hard time. I think two of the stocks that Kevin said that he holds right now, the small cap stocks that he holds, is Robinhood and Corsair. The one that I am holding, the only one that I am holding now is Robinhood, because it's still down and hasn't risen as much as the others. But somehow, some way, if you check this out, it looks like it's closing in. We will either see a move up or down, a bigger move up or down sooner or later. Besides that, we have skills here below $8. We have Corsair 22 on top of 22. The lowest where it went was 20.10. Tattooed Chef 1607. Okay. Planet $3.15. Palantir less than $19. Roblox 25. Okay, the small cap stocks had a hard time, but big cap stocks, the big caps, the tech giants, they had a green day, a relatively green day. Apple set new all-time highs, I think. Yeah, Apple set new all-time highs as always. Let us check. Oh, it's not new all-time highs. It's just sitting below its earlier all-time highs during the last couple of weeks. It was up 2.3% the last day. $180 per share for Apple. Google, on the other hand, is at 29.58. It looks like Google is still inside that big upper sloping trend. It broke below for a while here, but it's managed to find a way to come back high. Let's try to do some more technical analysis here on Google and see and try to draw some resistances maybe. Let's see. Maybe we can draw one here. It touched here, it touched here. It touched both these places at the bottom, and it also touched during this time. So we have a resistance for Google at 29.80, just below $3,000 per share. The other resistance that we saw was at 3,015. So let's see what happens today for Google. It will be interesting to see after it climbed all the way back from the depths of hell here. Where many people thought it broke below the upper sloping trend that it had. Apple, on the other hand, is looking very bullish, of course. But on the other hand, I wonder whether it will do good on the next year to come or not. It's very tough to speculate on that because it had such a good year now. Look at that. Last year it's up 36%. How better can it do this year? Google, on the other hand, it was 70% up this year, but I think Google is better in line with its fundamentals, with its earnings. But on the other hand, Apple is getting a little pricey here. I feel like. Besides that, Costco is still getting more and more overvalued, but people value this company that has stable cash flows. Amazon is still stuck around here. Netflix at $313, MicroStrategy at $608. MicroStrategy will probably fall today a bit because Bitcoin is dropping. Intel hit 52. We had a nice day last day for semiconductor stocks too. That was interesting. 300 trend for Nvidia, 154 for AMD, and almost $52 for Intel. That's interesting. I love semiconductor companies. Besides that, Tesla at 1,100 now. But yeah, nothing else that interesting. The market will open in 12 minutes. Let's go check the cryptos real quick. It looks like they're having a red day. A small correction. We either got rejected of the 52k resistance and now we're dropping back down even lower, or it's just a small correction before we trend higher again. But the other time when I was checking the chart for Bitcoin, I noticed that despite how much time we have spent during this last dip for Bitcoin, it looks like... What's wrong with me today? It looks like during the other dip where we were lower at like 31 and... Wait, let me find it. Will it even load? Let me see if it will even load. Oh, this is a 1 hour chart. Let me go to the 1 day chart. Here, let me zoom in. Look at that. If you check how much time we spent during dips like this one, it's interesting because we spent like a ton of time all the way from 18th of May to July. That is a whole 2 months, man. And now during this dip, we just spent like not even 1 month. We are at the end of the first month. So it will be interesting to see what happens here. It looks like we are at an inflection point. We have passed the inflection point, and it looks like we're about to flip positive now and turn to maybe make a move like this. Maybe make a move like this. But these moves look so green, and this one is not looking ready yet. We see some weakness still. So let's see how this will play out. Something like this might happen, where it has that first test of the upper resistance. It drops back down a bit, then gets the bounces in the support lines that we have lower, for example at 45k, at 42k, and from there it might be able to start running again. It will be interesting to see, but we can the time is on our side, so we'll spend as much time here and see what happens. Besides that, we have Bitcoin at 49k, just below 49k, Ethereum below 3.9k, sitting at 3.9k right now, BNB 550, ADA 150. ADA had a good move, and it is up 30 cents over the last couple of weeks. That's interesting for ADA. Besides that, there's nothing, things are kind of boring. Let's go ahead and check the news. Let's go on CNBC and Yahoo Finance to check the indexes before the market opens. We are at the end of the year, so this last week has kind of low volume, but things will start picking up in the next year, at the start of the next year. Facebook stock could get a big boost from surging Oculus sales. Home price growth in the US slows for third straight month. Let's take the indexes. S&P, they look absolutely flat. Let's see. S&P 0.1% up, Dow flat actually, and Nasdaq 0.2% up. Let's see how things will open today and how they will play out. I still have cash available in order to buy any possible dip on my favorite stocks and to reopen some positions maybe that I had closed and took some profits. Let's see what happens today. Besides that, EU has opened green. US, that's from the last day. Oil is up 1%, natural gas down 2%. Gold, on the other hand, is 0.3% up. Interesting for gold. 0.3% up for gold and 1.1% up for silver. Okay. Besides that, let's check the headlines on CNBC. Wealthy investors want to own a little less of the everything bubble in 2022. Okay. Top US venture capitalist firms are struggling to find the right stuff in Europe. Why investors remain bullish on India startup outlook? Fitch says a third of ready Chinese developers, would face crunch in home sales. Veteran Strategy says China is set to ease monetary policy further. Elon Musk SpaceX face online backlash in China after space station near misses. That story was funny. But anyway, let's read that. Do we have a video here maybe that we can watch or not? Inflation biggest threat to the economy. Millionaire investors were most bullish on cryptocurrency. Let's watch these videos after we read that. More millionaire investors think the economy will be stronger in 2022 than those who believe it will weaken, according to the recent CNBC Millionaire Survey. Just over half expect the S&P to finish next year with a gain of at least 5%. But overall, the survey of wealthy Americans finds little appetite for more risk within investment portfolios. If the market is in an everything bubble, wealthy Americans are headed to 2022 saying they don't really want much more of everything, according to a recent CNBC survey of millionaires. More millionaires, 41%, say the economy will get stronger next year. versus 35 who say it will weaken. I just brought my mic back closer to me. Who say it will weaken. According to the recent survey, okay, just over half, 52% of millionaires expect the S&P to finish 2022 with a gain of 5% or more. But it's another finding from the CNBC survey which is the most telling and signals a downshift in enthusiasm from millionaires in the market and an overall risk appetite that has weakened, even as the market has come through the latest Omicron and Fed fears to see the S&P 500 set a new record and the Dow Jones Industrial Average remain near its highest ever level. Twice a year, the CNBC Millionaire Survey asks investors which major asset classes they plan to increase exposure over the next year. Investor appetite for every investment type is now lower than it was in the spring 2021 survey. The percentage of millionaires who say they will be increasing investment declined across every single class, including equities, investment, real estate, alternative investments, international investments, and precious metals. For the CNBC Millionaire Survey, can take more risk, can get out of the market. The market is high and people are nervous. Said Lou Alfest, CEO of Alfest Pernod. Okay, our clients are fearful, but none of them are at point of getting out. He said they haven't got the guts to pull out. He said you can't really get much more risk on as far as fresh dollars. What are you going to do? Dump all your large caps and invest in all emerging market stocks? No one is doing that. He said 13 years into a bull market run. That's a nice article, by the way. And after a big pickup in volatility last year, that was resolved with government stimulus and the Fed printing more money. There is limited room to move up, so maybe you take your foot off the pedal here. That doesn't mean any market conditions that would equate to a significant de-risking that it makes sense if people are taking a step back and reassessing their portfolios. It's been one hell of a ride, and risk appetites have only increased in the not too distant past. He added. Inflation, the Fed, and the 2022 economy. Even if the wealthy are less enthusiastic buyers of stocks, they are buyers of goods and the economy will do well and corporates profits as part of it, as long as outside of stocks they continue buying everything at higher prices, Altfest said. When people get tired of spending freely, he said, is more important for the economy and market than the wealthy pullback a little on the risk appetite across asset classes. Am I still live? Okay, I'm still live. After two extremely positive years for the market in 2020 and 2021, I'm so sad I missed 2020, man. Investors are digesting the information around inflation and whether it means they should anticipate slower equity growth in the near term. Those two things set the table. How much more risk can you take? Let's watch this video, by the way. Scaredness is highly evident.
100 miles of search.
Scaredness is highly evident in economy, but for wealthy, inflation is not an immediate threat. If you are worth 10 million and you are living off 200,000 a year, even if there is 6% inflation, the inflation won't change your lifestyle. For the wealthy, the inflation anxiety is not equal to the legitimate concern the less fortunate in society have about food budgets or buying a new car. But there is no getting away from the fact that inflation can erode the value of their assets. Sonnenfeld said, and that makes it harder to weight inflation relative to investments after a period when investors have benefited from such an extraordinary market. Let's watch this video, maybe.
Inflation. When
NBC Millionaire Survey. Robert, what'd you learn?
Well, Becky, the number one economic worry for millionaires right now is inflation. When asked to rank the biggest threat to the economy, inflation ranked first right next to government dysfunction. That is according to the CNBC Millionaire Survey. That polls investors with $1 million or more in investable assets. Inflation ranking second among threats to their personal wealth. And most say inflation is here to stay rather than temporary. Now, there is an emerging generation gap when it comes to inflation. Millionaire baby boomers were 4 times more likely to cite inflation as a threat to their wealth than millennials, and they were nearly twice as likely to say interest rates will be higher a year from now. On the whole, millionaires are relatively optimistic about the economy, markets, and even the Fed's response. Majority say they are very confident in the Federal Reserve's ability to manage inflation. Now, most expect the S&P to be up at least 5% next year. Only 9% plan.
47% somewhat confident. 37% not confident at all.
And to reduce their equity exposure, their favorite sectors for the next 12 months are tech, financials, and healthcare. So they are worried about inflation, but they feel like the markets and the Fed can handle it. Guys?
I guess it's not a huge surprise that the people who are millionaires are worried about inflation, especially if you just became a millionaire. Like, oh, you finally made it, and guess what? $1 million is just not worth what it used to be. And maybe not a surprise that baby boomers are more worried about it, too, because they're more likely to either be retired or close to retirement.
Well, remember, inflation means different things for different income groups. For most of America, inflation means rising prices for the things they buy every day. For the wealthy and millionaires, inflation really comes through on the interest rate side. That's what they're worried about, is rising rates and the impact of that on their assets, because otherwise assets do well at a time of inflation, whether you're talking about real estate or the stock market. It's the rising rates that are their biggest concern. And on that front, so far, they're a little more optimistic about a modest increase in rates as opposed to a dramatic jump. And that's why I think they're more optimistic. But it means for them, it's about the rates. For most of America, it's really about the rising prices.
Robert, thank you. Good to see you.
Let's move on from here. But there's no getting away from the fact that inflation can erode the value of their...
100 miles of searching.
What is that? No. The value of their assets. Sonnenfeld said, then, okay. Assets went up more than inflation this year. More than what they say inflation is. So, the real inflation, nobody knows. But next year could be a double whammy. Where if inflation is growing and the market is flat, you are seeing erosion of value, he said. At least this year, there was no reason for panic, and well preserves grew assets faster than the rate of inflation. Because the Fed flooded the market. I don't know how many people